This question comes in from Bill Roberts, and he says, Charlie, you and Warren have been making concentrated investments since the 1950s. Many of these investments have led to gains, but even more impressively, none of them have led to significant losses. As far as I can tell, neither one of you has lost more than a few percentage points of equity on any single investment. Daily Journal has recently bet a large amount of its capital on Alibaba and foreign traded stock. It's also taken on an additional $40 million in margin debt to make these investments. What makes you so sure that these investments won't lead to a substantial impairment of Daily Journal's equity capital, which would impact the company's ability to reinvest the resources needed to develop the company's software operating business?
Well, of course, if you invest in marketable securities, you have the risk that they'll go down and you'll lose money instead of make it. But if you hold a depreciating currency, that's losing purchasing power. On balance, we prefer the risks we have to those we're avoiding, and we don't mind a tiny little bit of margin debt.
Jokes aside, this is not financial advice by any means. Please don't go into margin if you don't know what you're doing. Clearly, Charlie Munger doesn't know what he's doing as well. Don't just follow him into this blindly. Anyway, I think for a long-time follower of super investors like Charlie Munger or Warren Buffett or even Peter Lynch, they are your classic investors that gives zero about what other people has to say about their investment or their portfolio. So once they determine that it is an opportunity that they wish to take a swing at, the cheaper it becomes, the more excited they will get and the more they will buy. And even disregarding the fact that, hey, they have to take on some leverage or even some margin. So let's get some facts straight. Charlie Munger is already 98 this year and he is as sharp as a razor. It's incredible. So there have been many haters saying that he's old, he's senile, and he clearly lost his ability to make proper judgment. And even if he is wrong, it doesn't matter because he probably don't have much time left. And his purchase in Alibaba is probably like a YOLO bet. First, I'm not going to cancel this kind of narrative, but not too sure what kind of upbringing and environment you grew up in to make such a comment. It's just outright disrespectful personally. Second, your comments probably won't even affect him because he probably led a pretty fruitful life and fulfilling life. Third, if you were to really sit down and think about it, it's ironic. It's exactly because he's already so experienced and have such a great reputation of being a GOAT in investing, which is the greatest of all time. Why would he bother tainting his reputation just because of YOLO? He doesn't need to prove anything anymore. In fact, by taking on this risk, there is only downside with very limited upside. That said though, he is a financial steward of DJCO, which is Daily Journal Corporation. Even though many people have been drawing comparisons between Charlie Munger's net worth and his minute exposure to Alibaba via his minute exposure to Daily Journal, just give the man some basic benefit of the doubt that he will act responsibly and put shareholders' interests in mind. Man, it's not the first time he's managing a fund. I don't understand why suddenly there's so many people much more experienced than him managing a fund, teaching him how to manage his funds. Anyway, back to the topic of Charlie Munger actually leveraging on Alibaba. Initially, prior to the annual meeting, I did not follow Daily Journal closely, hence I was not made aware of this leverage. So upon further digging into Daily Journal's 10K and 10Q, you can actually see that on the net, they sold $50 million worth of securities but purchased 87 million. So out of this 87 million, we know that through their quarterly declaration, they added another 300,000 shares of Alibaba, which is BABA. So throughout the last quarter, Alibaba was trading in the range between 110 to 177, give or take. So this would mean that their cost will probably reach out to 33 to 54 million. But given that Munger, being an astute investor himself, I would presume that he would not have bought it at the higher end of the range, but instead the cost basis would probably hover between 30 to 45 million. The funny thing though, they only declared buying Alibaba in Q4 of 2021. But clearly, they bought other securities as well without disclosing the remaining 40 to 50 million. So if Daily Journal is not required to provide any forms of disclosure on the remaining purchase, it would most probably be a foreign stock. So will it be another Chinese stock? Who knows? It's a mysterious stock for everyone to guess. But Munger is clearly hiding things up his sleeve. For people that proclaim that Munger has lost his magic and he doesn't know what he's doing, on the sale of that 50 million that I mentioned previously, they realized a gain of 46.7 million. Dude, sale of 50 million while realizing a gain of 46 million, his cost was 3.3 million. And that's 15 times of his initial capital. 15 times. Now, the main question, Munger has leveraged. Should I leverage too? I think the question should be a lot more nuanced than this. It's really hard to ascertain whether is it a good time to leverage or not, especially without understanding your own unique circumstances and what your different commitments are, and more importantly, your expected cash flow and your different assets, etc. Personally though, I usually stay away from margins. No matter how convinced I am that Alibaba is a great investment opportunity, I have never personally used up a huge amount of margin to prove that I'm right or to take advantage of this opportunity. So I don't have much to prove, I'm just a random clown on the internet, I'm sharing my own opinion on this platform. So I know of different strategies such as extracting loans from your own property equity, etc. and essentially trying to quote-unquote leverage your portfolio or sell long-term puts based on expected cash flows in the near future. So I think all those strategies are fine as long as you know what you're doing. Personally, I'm still borderline uncomfortable with leveraging yourself to the T. I don't think that it's worth my worries. Given that Alibaba is going to report their earnings soon, I look forward to seeing how the market will treat the stock. So if the market really bring it to a new low, I actually look forward to seeing how Munger intends to steer this portfolio. I think it's one thing to see how all your legendary investors like Buffett, Munger, Peter Lynch earn insane amount of money on a compounded basis, and it's another thing to see how they actually react when the situation goes south and their investments don't turn out well in the short term. It's not a common phenomenon to see your portfolio going up and up and up every year, so don't get too comfortable with it so soon. So I think it's a lot more fruitful, and normal investors can learn much more when you look at how all these goats of investing react in bad times. So I'll end off this video with a clip from Munger's perspective on why he even bothers investing in China. I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye.
He's interested in your take on China and Chinese stock exposure for the long term. He says it's becoming quite evident that Chinese companies could be banned from doing business in the Western world, or maybe some of the Eastern countries too, because of the number of the following reasons. 1, the security threat issues. 2, the potential conflict over Taiwan. 3, inability to meet Western accounting standards. And number 4, human rights issues. Considering all of the risks mentioned above, why would anyone as smart as Munger or Buffett consider investing in China or any of the Chinese companies?
Well, we did it for a very simple reason. We got more strength per dollar invested. In China, the companies we invest in are stronger relative to their competition and priced lower. That's why we're in China.